I think the market has been actually trying to digest whatever that happened on the rates cuts. So slowly it seems like the market is starting to react to that. We started to see gold slowly trying to go higher, Nasdaq and other stock markets like Nvidia and Teslas, they are actually bouncing back. So yeah, I will check gold. I see gold there. So at the moment, as we are still talking about gold, I will start with the dollar index so that we understand what's really happening with the dollar. As you know that almost 90, let's say 80% of the pairs that we trade, they actually go with the dollar. So it's way much better to check what's really happening with the dollar index, because that shows the strength of USD currency, whether is it going up or down, or actually let's say if maybe actually the strength, if maybe we can see the weakness or maybe the bullish momentum. But at the moment you can see that we are coming from a very nice bullish move, and we are no longer on that, so which means we expect the market to go even lower. So since we broke out of this uptrend, we expect this continuation of a downtrend. So if you can check, we are very closer to the lowest area that we reached previously, which is this one here. If you draw a line there, you can see that no man, that is actually around the same or quite similar levels, which means the market might respect that. The market might respect this area and start to go to the upside. And that will not mean that maybe it's a bad thing. No, it will mean that the market is just respecting the previous area that we have, or that we had before. And at the end of the day, the market might still try to go even lower. But sometimes the market might play a role there. You can see that already the market did respect this area. We can say respect this area several times. So once the market breaks out of this, that will be clear that the dollar will keep losing that momentum. I hope that makes sense. So I see gold, I see oil, USD JPY. I will also check that. So let's go straight to gold. Let's go straight to gold. I see Nasdaq, Russell 2000. I think I don't really have a Russell. So yeah, or I never did actually do some analysis on Russell 2000. So this is what we have on gold. On a bigger time frame like daily, we can easily see that we are still on a continuation of that bullish momentum. So which means we expect the market to keep going even higher. The reason behind that is technically we are on an uptrend already. But if we check fundamentals, they all favor this uptrend. We have tensions in the Middle East that will favor a safe haven, assets like gold. So which means that will be a good thing actually to buy when we have tensions in the Middle East, Russia and Ukraine. That still continues. That is also a plus. So another thing is US did cut their rates, which means it makes the dollar to be little bit weaker, and they are going to continue to actually cut their rates. So which means, yes, that is actually good for this uptrend structure. So from there, we would say, where can we actually look for our buy positions? I think on a daily time frame, it's good for overall a trend. But if we go on a 4 hours time frame, I think things will start to be way much clearer. You will see that, yes, we had some structures along the way. And even now here, we had an area that we can use as a resistance. So what I'm expecting here is quite similar structure like here. You can see it there. The market might break out there, and we also expect another breakout. So which means we expect this nice move to the upside. But with the moment, with the structure that we have, anything is still possible. The market might still reverse to go a little bit lower, or maybe around these areas. before we see another continuation of a push to the upside. But the overall structure, yes, we are still on that uptrend structure. I hope that makes sense on gold. I hope you did understand that. So let me check. Someone said check go Nasdaq, USD, JPY, and oil. GBP USD. Okay, I will check this. I will check that. So let's see.
Did you know that we have 100% free trading tools and data available for you on our website, a1trading.com, right now? We have free courses for you to browse. You can also check out things like retail sentiment and free articles from our analyst Frank that include things like Edgefinder screenshots and trade setups. You can find all of this and so much more for free right now on our website, a1trading.com.
Let's go. Okay, USD. I think I will just start from USD going further. So yeah, on US bullish momentum, the stocks like actually lower rates, and that we are going towards that. Already they did cut the rates, so that is going to be the topic for now. And we had this resistance area for a quite long. You can see it was very strong. So once we break out of this area, it shows us that the market is willing to go even higher. So this is the new structure. We no longer have any proper resistance, so which means yes, there is a room for the market to go even higher, especially on USD. You can see that. So it's like the market has been playing games around this area, but I understand it seems like if you do check what's happening, sorry, if you do check US30, so you will know that Nike it's not performing very well. Nike is one of the companies that we that are actually in US30. So what we have here is the market is actually struggling to break this level, but now I can see the market trying to go a little bit higher. So obviously I'm expecting to see a very nice push after this breakout. Already we see a smaller breakout there, but it's possible that the market might play around to give us another retest here before we go even higher. But at the moment it shows us that the market is not really willing to go even lower, so which means that it's actually a very good thing. So I think we have to look for a proper buy there. Maybe once the market already even opened. So on US30, what's really happening on US30? So on US30 we can sorry. So on Nasdaq 100, I was still focusing on US30. So on Nasdaq 100, we can easily see that since we broke out of this quick downtrend, the market has been giving us a proper structure. So we expect the market to continue going higher. But it seems like the market is respecting this level of a resistance, but we'll just have to wait and see. If the market pushes lower, we'll expect the market to touch this level of a previous resistance. Now it's going to be our support to for the market to respect that before we go higher. I think that will be the area that we are going to look, unless if maybe the market start by breaking out of this area. I think there is a chance that the market can break out of that so that we can have a proper buy. But the overall structure, we can easily see that yes, we expect to see some very nice bullish moves. And after we had interest rates cuts, I think we don't really have enough or of a bigger move, you see. So that was actually welcomed by the stock markets, but we did not really see any aggressive push. So maybe that will happen this week or maybe next week. But at the moment, we still expect some serious bullish moves.
Gold for bullish. Yes, that's what the market is telling you. Same thing with yen pairs. Somebody said yen is weak. Why is it weak? Why is it going higher? And I saw Kenzo wanting to short it. Okay, cool. What's currently happening? What's currently in Japan? What's currently happening in Australia? What happens in America? What happens in New Zealand? What happens in all the other currencies against yen? What is the economic situation. That's what drives the market. Because what is the yen? What is the yen price of? It is the value of the economy. That is beyond trend lines and patterns and wedges and SMCs and value gaps, and I don't know what else is out there. RSI and overbought and oversold and overstretched. And if you stretch something too far, yes, you're going to get a pullback. But something that moves higher, especially when it comes to gold, when it comes to lower on dollar, comes to higher on yen pairs, it is for a reason. You don't fight something that is already there, already telling you. It is just about to tell you even more. And that's why we always have fun with the what do you call it in English? We call them my FX book and the Outlook, where we are having a bit of fun with that. Generally, a lot of traders is short euro, but it's going higher, 136 pips in loss, 299 on pound dollar, 384 on dollar yen. Why is that happening? Why is NAS 100 silver going down? Why is DXY after this? It was a very clear direction. Okay, let me tell you. All right, so S&P going a bit lower, slightly, very little movement, by the way. But dollar S&P lower was because it was less confidence in the economy. What is less confidence in the economy? Less sales, less money to businesses, less development, less growth, less. Why is dollar falling? Because we're going to cut interest rates even more. Because the economy is doing poorly. Because poor economy means lower interest rates. Lower CPI means lower interest rates, means lower dollar. Why is the dollar demand for dollar falling when we have lower economic growth? Because the demand for dollar goes away when the returns on holding dollar goes lower. It's all money, people. It's all money, my friend. It's all money. Did I forget how to laugh? I think we forgot how to laugh. So, from yesterday, I said Australian dollar is bullish. US dollar, right? And I said it wasn't a good pullback. All right, cool. And I said what? I said higher high, higher low. What happened? Higher high, higher low. I don't know if that's what you were doing. I don't know what you did. But I know it is going higher. And why is it going higher, Brasir? Because that is the direction you were holding from yesterday. And I saw that a bit later. And I think, okay, cool. You got the direction. The question is, Usama, where is Nick? He's not here. I'm here. So let's work together. So let's go through it. Australian dollar, US dollar is going higher because of lack of inflation, because of lack of growth, because of pricing in interest rates going lower. Therefore, that makes dollar weaker. For everything else, Australian dollar becomes equally stronger when dollar gets weaker. So this is the pair to look for if you're going to get if you really want a directional trade. Same thing with New Zealand dollar. What do you mean? It's because the biggest country in the world, we are not equal in sizing of economies. So if the biggest economy, the one that has the most amount of money, does something, everyone says, yes, sir, yes, sir, yes, sir. They're just following orders of what dollar does or it doesn't do. The opposite. Why is that happening? Because where the dollar is doing what it's doing, everyone is doing opposite. Why are they doing opposite? Because the weakness in dollar / the returns is going somewhere else. Where's the highest returns? The ones that has the most volatility. Who has the most volatility? Australia, New Zealand. During COVID or after COVID, during 2020, 2021, Australian dollar, US dollar had the best performance of all the dollar pairs, and about, I think it was about 40 to 50%. While US dollar CAD was like 8. Right? Tony says gold is still bullish. Of course it is still bullish. It will be still bullish until we hit the peak. Where is the peak, my friend? It is just the same as when you're climbing Mount Everest. Where is the peak? It's gonna be far and beyond your imagination of what you think you're able to climb. Okay? Why am I saying that? Because there's a mentality issue in this chat somewhere in between the lines that people are saying we should peak on gold, we should peak on dollar, we should peak on Australian dollar, we should peak on this, we should do that. No, sir, we shouldn't. We shouldn't peak. Yes, we need to take profit when we are reaching our desired profit target, which, by the way, on the Australian dollar, US dollar, this week is 68.92. Are you going to take your profit there? Totally up to you. Not financial advice. I'm just saying that's what the pivot point says. But I'm telling you that your way of doing things is always going to be, are you able to predict? So are you able to do it again and again and again and again?
Yeah, so I'm just going through natural gas. This might be one trade that gets a little interesting. Natural gas is a slippery son of a gun. I would love to see some natural gas back down to the lows again and see if this just takes time to build. And this is kind of what I'm hoping for, is this just builds and builds and builds, and then we have, more of a eruption in natural gas. But I think we can all see a potential head and shoulders here. Left structure, center, right shoulder. If we break this neckline around $3, natural gas could have a pretty strong recovery. I don't know. I'm not taking the bait. I mean, we've seen this thing mess around with all sorts of traders, and it's a wild and crazy instrument. But just be mindful of a potential breakout. That I could see natural gas going higher. Are you long natural gas?
I have Occidental Petroleum. They do
me
oil
too.
And natural.
Oh yeah, speaking of, I do have to. Okay, so I did some work on Oxy yesterday at the end of the session. And I need to add in, I'm going to add in a very inexpensive covered call. So let me go to my positions here. OXY. OXY. So I have the shares. I have them covered at 54 out to October 25th. I believe that's just before earnings. Just before earnings. So let me check on... So earnings is November 5th. If I'm not getting it called away, let's see. I think what I wanted to do was this. If we go, yep, I've already got the trade already pending here. I was going to buy a $40. I was going to buy an out of the money put for 17 cents. It's going to cost me, I mean, it's not expensive. This is about $60 to protect 500 shares. And if price drops aggressively on Oxy to the low 40s, this should be trading for a decent amount of credit. So I think I'm going to do that on the shares that I own. So I think it's in that account and that account, that account. So all these accounts have the shares. Everyone else just has a little bit of exposure. But I'm covered at 54. I need to buy... I'm going to buy a $40 call for... Let's see if I can get it for like 15 cents, hopefully. 15 cents on this $40 call. This would be 5 contracts. And this is for some protection. All right. So let's see if this will fill at 15 cents. Perfect. All right. 9732. You want it to come down?
Gold keeps running away. Yeah. I mean, if I had bought it yesterday, it would have been fine today, but that would have been chasing price. And
yeah.
I don't know.
Okay. All right. Need to do a quick.
Some analysts say, like, if you chase price, like if you buy at the all-time highs in the past couple of years, it's worked as a strategy. But I just think it's so risky, because then you have times like in late July on the S&P where we hit all-time highs again and then came all the way down for the next month.
Agree. I don't like buying highs,
it's
man.
Always tempting. I
know.
did something though that's similar to that this morning. I took a bull put spread on the S&P, so it came down, and I took a 5705 by 5700 bull put spread. So as long as price stays above that, I'll be okay. The premium was 205. So
Okay.
kind of hoping that it can hold above that level. And if price comes back up to these highs like 730, 5730, I'll probably look at a bear call spread for something else. But probably want to take it close to midday if price gets back up there. But if it's like 2 o'clock, premium's gonna be pretty bad by then. But yeah, I'm trying to do these 0 DTE plays, and I'm thinking the news week this week is pretty slow, so there's probably not a huge impact on things that come out because consumer sentiment came out. I don't really think that's going to drive the markets this week. I don't think GDP necessarily will next week. So I'm just kind of like looking at a range.
And what are we looking at here, Frank?
SPX.
SPX. Okay. I just saw that I had a pending order on JD, and it was a max out at. I just got filled for 1760. I'm gonna try to get filled. Let me check and see what accounts have. I don't know if this is in everybody's account, but I might need to do some profit management here. So JD, I have a 13 call, and I'm selling against that a 32 call. So this one, and these are all puts. So the 13 by 32 closing for 17.60. I'll let that pend. 13 by 32, 17.60. That got filled. 13 by 32, 1760. All right. So this is just some profit management. I'm into these for like a 14 something debit. I'm trying to get out for like a 1760. It may or may not work. I mean, this is showing a mid price at 1690. So it max out at 19. I'm way out on JD. So I mean, if I close this out, I'm just going to redeploy and start kind of my campaign trade on JD over again. I'm just going to leave that pending. So that's pending. This one got filled for profit. This one is pending. 13. Okay, this one here, I'll close out 1760. I'll let it pend. That one got filled.
Just have so many trades going on.
Who, me?
Yeah.
Yeah, I mean, that's why the spreadsheet
How do you
helps.
keep up with all?
Yeah, I just have to track them in a spreadsheet. I mean, the nice thing is I just search for them. I mean, if I take a look, it's not that hard. I mean, I look at if I go through my portfolio A to Z, I have them all like, okay, let me check on this one. If there's expirations coming up or positions in P&L for the day, then I just go to my portfolio or my spreadsheet, look up the ticker, and then I usually type everything out. So it's like, here's what I started, here's what I've done to the trade, here's my break even, what do I want to do? And it's just a nice little refresher. So it's not that difficult. But yeah, it's a lot of stuff. All right, so that one closed out.
Yeah.
All right, so I want to look at JD again. I mean, this is a nice big move to the upside, which I'm happy to see. I think what I'm going to do again is if I take a look at this, I mean, it looks pretty solid. We are trading, I mean, it's a China play. It's China e-com, so 9.9 price to earnings, 0.3 price to sales. Fair value, $60. We're trading at 32 right now. I think there's a lot of upside potential here again. Question is, do I want to just own shares or do I want to, do some puts? I think the reality is I want to do some puts if it's worth my time. I don't want to tie up a ton of capital.
Why JD? What's going on with them?
Well, it's one of the bigger like ecom games in China. So I don't know if JD has something to do with the Shein and the Temus and stuff like that. I mean, maybe it does, but it just checks a lot of boxes on like basic fundamental analysis. I like the discounted cash flow model showing that it's. I mean, if we look at it from, let me take a look here on FinViz and go to JD. And we have a lot of cash. We have forward price to earnings. We have price to earnings. We have price to sales, price to book. We have little to no debt. Looking, and I want to go future quarter growth. So let's see, insider ownership. There's some institutional ownership. There's a lot. I know this is one of Burry's favorite stocks right now. In his
Why are
fund.
they up 9% today?
So I think China cut rates. I think the big news is, let's see here, what's going on with Chinese stocks, Alibaba. Yeah, these are all. Let's check. It's something to do with like I think the PBOC just cut rates. Yeah, they're all up big today. I mean, I had a huge P&L swing. I'm up like 20 grand today on just China stocks. So let's see, stock gain after China Central Bank announced plans to slash. Are you long in anything like China?
86. I bought Baidu after its earnings. So I'm up now, but I think I got it at, maybe it was 89. Might have got it at 89, but now it's looking good.
Yeah, I'm long long Alibaba, long Baidu. Those are looking good. So we have the PBOC announces plans to slash the bank's reserve requirement ratio by 50 basis points. Central bank will also cut 7-day reverse repurchase rate from 1.5 to 1.7. Alibaba rivals Baidu, PDD, JD also noted upward movement in their stock prices Tuesday morning. Electric vehicles, including NIO or NIO, XPEV, Li Auto, also up. So I'm not in the China EV plays. I looked at them. They're okay, but I did like the SPAC stuff back in 2020, 2021 on EVs. They worked until they didn't. And I do think that in the EV space, like China's legit. I mean, they're producing so many cars, and it's wild. I do wonder if the market share will be big enough, but I also wonder what Europe does with tariffs and imports, what the U.S. does with tariffs and imports. I think the U.S. is going to be a hard market to be like, yeah, we're going to accept, Chinese automakers when we've got Fords and GMs, Toyota, whatever is here in the U.S. that is just looking to. I know Toyota's a Japanese company, but. I think it's going to be a tough market to crack, and we'll probably tariff the crap out of any Chinese car that comes in here. Alibaba also teams up with NVIDIA to supercharge EVs for Chinese automakers. Like, there's just good news coming out of China, and it's about freaking time. But we'll see here, like, Chinese stocks defy Biden's auto import ban concerns, rally to 4-month highs, central banks unexpectedly slashes interest rates. So in line with the Fed, China's like, okay, we'll play ball. So I think that's just part of the big news is cheaper money, more accommodative central bank, and there's ways to express that. So I want to look at some fresh positions on JD. I've done a lot of credit spreads here and had, since we had the lows in the 20s, long calls have worked out nicely. I've taken profit a couple of times. Credit spreads worked out pretty nicely. Overall, my trade on JD, if I go to all the accounts here, I'm up like $8,000 on the year on JD with hopefully a lot more to roll into that. But I want to get some fresh positions on. So let me take a look. I'm definitely willing to own the shares. I want to see, maybe some here in like the $25 or $6 area. I could just add some shares now and then just dollar cost average in. If I just take maybe a $1,000 to $2,000 position, that wouldn't be bad. There's so much upside potential here. So if I did, let's say I do a $2,000 stake, and that becomes, I don't know, 2,000 becomes 6,000. It's not too bad. If I did 2,000 now, 2,000 in the low 20s, that'd be $4,000. Break even at 25. $4,000 becomes 12 to 13,000. So just thinking about maybe just buying some shares, but I'll probably express it first with an option.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.